Hey everyone, Jake here with the last video of the weekend analysis, and we have XBI, which is honestly one of my favorite ETFs to watch for kind of signals on the broad markets because this one generally likes to lead the market. And what I mean by that is if we go back to December 24th, that was a massive move down across the market. Now, what we had here was a perfect kind of inverted hammer here right on this trend line support. And this was actually kind of the bottoming signal on Christmas Eve because the S&P, the SPY, and the QQQ were both showing incredibly bearish candles on the 24th. And this was the only one that showed that kind of buyers came back in and risk was turned back on a little bit. And generally, obviously, with XBI representing biotech, there's going to be more speculation and kind of more quote-unquote risk-on mentality for XBI when there is a reversal. So this was kind of the first signal that we could have a bottom in late December, and it did turn out to be correct. And so now what we have is, notice in SPY and QQQ, we had not touched this area yet. We had a buffer zone on it because the price had not really touched these areas perfectly in the past. Now, XBI is the only ETF that is touching this area out of the three that we've looked at. And so this is another kind of indication that this generally leads the market. So we're already at the SMA 20 here. From the weekly candle, this is daily price action, and this is the weekly SMA 20. If we can break through this on XBI, that is something to keep in mind, and that may offer some direction for the other two ETFs if we break out through this area. Now, notice as well, this is not just the SMA 20 resistance. We also have this megaphone resistance here on the daily trend line, showing resistance as well. So this is coinciding almost perfectly. So not only do we have to break out through long-term resistance, but we also have to break out through the short-term trend line as well. So all in all, very heavy resistance going into next week. And if we go back and look at the vortex, I did mention in the previous video that this vortex indicator can be a little more predictive or predictable than, let's say, the SPY. And the reason for that is notice how big these divergences get between the vortex indicator. So it occurred here, and we had a pretty decent pullback after that happened. And notice when this starts converging and crosses, that's kind of the confirmation for the downturn. Same thing here. We had this big divergence right around 1.2 threshold here, and this was a top. And it was actually coincided pretty well with this trend line resistance as well. Pulled back hard. We had the cross here, and we had this huge move down. Now we've had some noise here, but we really have not had a big divergence like this in a while. Now notice here, when the VI negative is over the VI positive, the red's over the blue, this is the opposite. It shows that we are near a bottom, and so this area was a perfect kind of match with the vortex diverging. And so once the vortex crossed, that was kind of our confirmation. And so we'll just have to see if this starts to reverse to the downside, which would suggest a reversal coming. And so we will just have to see if that occurs. Now we do have this uptick in volume, not a ton, so we'll just have to see if volume continues into next week. RSI, same thing. Every time that we've kind of topped out at this threshold, we've been pretty close to 70 on the RSI. Here we pulled back, and now we're overbought again. We're not exactly extremely overbought or anything like that, and this could easily continue to move up. So this is not exactly predicting bearish tendencies in the future, but in the past this has shown potential reversals or pullbacks in the market. Same thing with the percent range. We've been overbought for a while now. And once this starts to move down or shows divergence, that's when I'll really start to look for a potential pullback. But all in all, we are looking forward to next week. We can easily create an alert here on this trend line for a breakthrough, touch, or bounce. We can make it very not sensitive with a lot of margin of error here shown by the purple area. or we can make it very specific and very kind of sensitive here. And so let's do just a low sensitivity so we're alerted right when this line touches next week. We'll do it for a test of the 5-minute candle. So anytime that the 5-minute candle touches this line, we will be alerted. We can just do megaphone resistance. We can do it for 7 days and triggered 3 times. So now the alert is created on this trend line, and we will be alerted via our email or mobile device when this touches. So just a way that you can use the TrendSpider platform. We have many other ways to use it. Please check out our features page to get a full rundown of what we have to offer. And we have a ton of new features coming as well this year. So keep your eye out, and thank you so much for listening to our videos and trying out our product if you are a customer or a trial user. Thank you so much, everyone. Happy Martin Luther King Day, and we'll see you next week.